But yeah, without any further delay, let's invite our keynote speaker for this session. Is the CEO of Seerbit, and let's welcome in on stage, Mr. Omoniyi Kolade.
Thank you. Good afternoon. Sorry, you allowed me to sit down because of the guys online. Okay, so I'll tell you a little story about Seerbit. Seerbit has been around for quite a while now. We've been around for like 10 years, but I guess a lot of people don't know about us. And reason being that our model was just totally different. We're offering service to the bank directly. The whole idea was creating access for innovation. That was the whole direction for us. We realized that the bank doesn't have the capacity to understand the opportunity in the actual opportunity in the market. So what Seerbit tried to do was to figure out those opportunities, go to them, partner with them, and launch those products into the marketplace. So that's what we've been doing for the last 10 years. But 2 years ago, we decided to feel that they become so big that they don't realize the opportunity they sit on. So the best way we could do was to actually launch directly to ourselves and go and solve the problem ourselves. That's where we went direction of empowering ourselves with a license and also scaling the platform across Africa. So today, we're in 10 African countries, and we're still growing. Thank you. So I'll be discussing on growing with strategic alliance. I think there's a little bit mistake, or let's say a gap between building and the growth. This is the topic we're communicated to. Okay, so does your business operate as an island today? That's a big question. I'm not sure there's any business that actually operates as an island. So I would say the question or the answer to the question is actually no. No business is an island today. Now, I'm going to take us through a very interesting journey about how the ecosystem plays today and what we've learned over the time. What do the companies have in common? All these guys, IBM, Microsoft, eBay, PayPal, the banks, Western Union. Then you have the MasterCard, and then you have Visa card, and then you have on, and the fintech player too. The whole idea behind this, showing you this, is they all follow a simple direction. Each of these have a use strategic alignment to drive growth by enabling both parties to capture network effects and capitalize on the existing competitive advantage. Now, if you look at Microsoft today, most of us never have an idea why Microsoft it is where it is today. The whole idea was to work with IBM at the early stage to agree to build the software for IBM. And that only alignment actually scaled them into where they are today. It was just that singular partnership that put Microsoft on the map. And then looking at eBay, look at PayPal. PayPal was not really scaling at the pace at which they should. What changed the direction for PayPal was at the point when they partnered with eBay. And what was the model? There were two challenges on eBay then. eBay had buyer, which is an auction platform, an e-commerce auction platform. So you have the buyer, and then you have the seller. Now, for the buyer, they have one big challenge. I will reference back to 2005. There was 1 billion cards in the US, and 78% of those cards were credit card. 23% were debit card. So at that point, most businesses on eBay, they never had opportunity to be able to be scored. They don't have what they call credit scoring. So they couldn't have the capability to actually opt for what they call card system or a payment solution. They never had that kind of opportunity. Now, leaving it to paper, it was solving two problems. SME, you cannot afford a scoring system. Then you also have a customer which feels that what he's paying for is too expensive for him. And partner with eBay makes them easy to understand that we can solve the two. You don't need a credit scoring to be able to receive money. You don't need to pay this high amount for me to actually process this transaction. And today, from just only eBay, they were just scaling to millions of users. Now, I'll come back to the bank itself. Today, we all talk about fintech. We cannot talk about fintech without talking about the bank. That's the truth. And the beauty of it is, without the bank, there's no Western Union, there was no MasterCard, because each one was just layering on the infrastructure of one common thing, which is the bank itself. So when people talk about fintech competition, I think we are mixing it up. The real foundation of financial service is the bank itself. So we cannot lose the direction and value of where the source is coming from. Now, I'll look at the African context, right? We also are in 10 African countries, and we see so much dramas. We see people building and trying to solve as a fintechs. We see silos. So you see mobile money in Ghana, you see M-Pesa in Kenya. Then you go to another country, then you see cards as the dominant. Then you see all this, but nobody ever thought about the customer itself. That we're all fighting one person, the cash. That is the biggest enemy. Cash never allows anybody scale. Sorry, can I get, I think my jacket, maybe I should, okay. Can I get like a wipe here? Thank you, sorry. Yes, sir. So, looking at the markets, right, over 80 million businesses, estimated businesses in Africa today, 753 commercial banks. If you look at the ratio, I don't see any way the banks can solve the problem or the financial service today, right? And I think those are the opportunities that actually bedrock things like fintechs today. Now, markets and technology are evolving too fast for banks to contend with, which we all know, right? The change on customer behavior is changing so fast. Recently, we realized that for every new social media that understands customer behavior has the potential to triple its users in less than an hour to 1 million. That's capability. We notice what they call the new, sorry to use that word, they call it the new cocaine, which is TikTok, right? What TikTok is doing is it wants to know you. And for every time you take a step into its environment, the next thing is that I want to understand your behavior, and I'm going to follow your behavior from day one to the end, and then start profiling for you to keep you consistent. Your attention is what matters to me, right? No financial system today thinks of that. I've never seen anywhere where it's all about opening an account. It's all about, I want to onboard. It's all about how many merchants do you have, how many customers do you have, and that's all we get today, you understand, in the market. Now, the banking industry opportunity have created the alternative payment, either we like it or not. And as long as we don't lose the sight of who created the alternative, the better it is for the market. Because the all advantage of looking at fintech is looking at where is the asset coming from. Going back to my second slide, my third slide, right, with the case of when it comes to the bank, Western Union, and the rest. Today, we talk about remittance. You have a lot of remittance business today. Not because they had that understanding at the day one. It was because somebody understand how to leverage on somebody's asset and network to build that facility. And then you can have cross-border transfer. With cash, nobody could do that. It was a barrier, and that's the war all of us fight. Now, what do we do? For us, we're looking at how do we reframe competition? What we have discovered that is competition is so much distracted today. Oh, thank you. Yeah. Sorry. I'm not supposed to wear this jacket, but yeah. Yes, and so today we feel that we need to reframe what they call competition, right? Competition is not really the next person building something similar to what you are building for us, right? We realize that the real competition is cash. The real competition is financial inclusion. The real competition is actually that merchant that wants to afford what they call acceptance solution to grow his business. It can't afford that. It's too expensive for an SME and say, hey, I'll give you a POS on how many transactions do you want to do per day. Today, we are boasting of NIN, 93 million. I feel very excited about that. That means we're getting to a point of identity management for payments. And as long as we can push further, then every fintech should be getting excited to say, we are going to the right direction. In the US today, you have about 8,000 fintechs compared to the size of their population, over 400 million. And in Nigeria, we keep debating, is there enough? Are we saturated? I don't think there's even a conversation of saturation or not. It's a conversation of what is the bank still missing? What is the capability and asset they have today? And what do you want to build to leverage and scale yourself? They always have that. What do you call it? Western Union has done that. MasterCard has done that. Visa card has done that. A lot of fintechs are doing that, and they're building on those risks and those opportunities. Now, we believe, before I go to this slide, we also believe that there has to be a sense of inclusion. A sense of inclusion means that for us, payment is movement of value. Whenever you move value, payment is involved, right? And everybody is trying to solve the problem of the value movement. That's the truth about payment, because you only pay when the value is exchanged. So the real whole idea of payment is the value movement. And how do we find those opportunities in those value movement? It's what it's all about. Now, taking payment out of it and seeing how you can create inclusion. And inclusion means that beyond just the payment, what are you adding? Today, I can talk about a SME out there that, let's say, mama put somewhere, right? That requires a credit to actually grow that mama put. I'm not sure any financial service is ready to actually score that woman to actually give her a financial service. That's the nature of the market today. But because it's not because she cannot be included. Firstly, we have a big problem again, identity. Can I identify her? Do I know who she is? And there was a scenario we did recently in Seerbit. We went ahead and said, we want to prototype and see how we can onboard this kind of mama puts in the market. It was just a test. We're just trying the model and see how they're going to react to it. But the shocking part was that we saw a mama put that was doing an average transaction of 1 million, 2 million in a day. The business that me and you are chasing that has a proper office cannot actually do in a day. And this is really where the payment value is actually in. And for her, like I said, there's still barrier for her. So how do I look at her and say, number one, I can give you a cheap device, a device that's not going to cost me $1, a device that says that I'm going to talk to, what do you call it? If I had to ship a POS, right, they go to discount or remove the entire custom fee when we ship a device like this to create penetration. Those are the answers, those are the questions we need to start asking, right? But if we're talking about opportunity, I think they're endless, right? And the way fintechs have been broken down when it comes to payments, lending, remittance, and all, right? One common thing that you find out is the opportunity is never ending because the appetite of customers never end, so the demands never end. So on my closing, I'm going to actually focus on two things. One is, from our story at Seerbit, we started at some point when the first license was issued for mobile money in Nigeria around 2008. And what we wanted to do was to help the bank create access for innovation. And while we're doing that, we're actually powering some of the licenses, building products for them, and also helping them build what they call agency network then. And one thing we discovered then was that we knew that this was not for us because we had a mature market. But we built a product to see that what would change this customer really, so for us to adopt this customer, we realized that it was about lifestyle. And what was the lifestyle then? We realized that a conductor or these guys that are on yellow bus that actually allow people to get into the bus, we discovered that the only way we could tell him to actually be financially included was to tell him that we have Baba Jebu on this app. If you put your money here, just keep. While you are even on the car, just keep playing your game. And if you're like, why not? He jumps on it. And another second part was to say, oh, this agent that you're working with, that you go to, it makes part of your profit. What if you can make everything you play? Why not? And then we saw people coming on board. So we realized that it was about lifestyle. Banking and opportunity in fintech should be about lifestyle. No customers wants to be forced anyway. When I wake up, I decided where I wanted to go to. If I decide to go to a banking, I choose the bank or ATM I want to go to. Why do we build products when we have to always try to attract and force you into our channel? You understand? Instead of me meeting you, you try to force me into my channel. And that we need to move from building a product fit to ability to build a product for lifestyle, alignment, and product for opportunity in an asset. An asset like who actually created the payment alternative for us in the market today, which is a banking service, which most of the opportunity are being unraveled because of their existence. Now, how do we who here will trigger the upper growth via strategic alliance? Today, I think we've been able to achieve that. Part of why we're able to be in 10 African countries was not because we had the understanding, because if you look at Africa as a whole, you see there are different cultures, different barriers. It's quite expensive to even penetrate regulatory-wise and stuff like that. And because we had this relationship where we're building products for some banks in Africa, we had a time where we were building solutions in Burkina Faso where they don't have a switch. And all we needed to do was create a mini interoperability between the banks and the mobile money itself. We had a place where we had to work in Kenya and look at, okay, if you feel that termination of remittance can be expensive, why do we create another model for you? If you're going to do a cash pickup, we're going to create a financial included service for you. Get the money inside, and then withdraw it anyway. So we started looking at that model. Why we're building those models were what gave us those expansion in those markets. And we started empowering some enterprise merchants there. So for us, I think we just realized that we cannot miss the real value of who is giving us those alternatives today, which is the bank. At this point, thank you very much. Is there going to be any question?
Yeah, so just one question. You have any question for him? Anybody with a question? Okay, so I guess the session, okay.
Let me ask a question. Thank you for the presentation. I was wondering, what exactly is your role in the market? I hear you said a lot about building strategic alliance. Do you forge this strategic alliance for companies, or do you look at their business strategy and say, this is the alliance you're supposed to build, and then you make that alliance happen? I'm just trying to understand. Thank you.
All right, thank you. So we are enabler and also direct player in the market. So as an enabler, what we do, we enable the capability for what they cannot achieve. So as a bank today, an average is it has all the infrastructure it has, but it doesn't have what it takes for him to deliver the service to the last mile or to the business today. And secondly, every business or customer is tied to one financial services, indirect or direct. That's the truth today. Even when we say financial inclusion and the rest, there's still another financial means they are actually working with, which is not visible to the commercial model that we understand. So for us, it's ability to identify those. And those ability to identify is about the banks are always talking, that's the truth, and customers are always talking. But how do you listen is just different. Because for every time you see a scenario of customer complaining out there, right, it's just indirectly somebody talking and telling that this is a challenge for me, you understand? And for us that we work with a bank, while we are building those solutions, we are building with them, we tend to realize the imaginary opportunity that lies with it. And we know that they don't have it. Like I said, if you look at a ratio of 80,000 or estimated 80 million businesses in Africa compared to just 753 banks, you realize that we've not started in Africa. It's just a journey to be started for us.